Okay, Orange County homeowners, the latest numbers are in, so listen up. Each month, I take a look at 4 data points that provide a quick summary of what's happening in the real estate market. So in just a couple of minutes, you'll know how buyer behavior is shifting, where we are in supply and demand, and what direction home values are heading. So let's jump right in with our first chart, which shows the sale price to list price ratio. If you've watched my updates before, you already know that the ratio measures what percentage of asking price homes are selling for. If you list your home for $1 million and it sells for $1 million, then the ratio is 100%. Taking a look at the first chart, you can see that the ratio is over 100% for the better part of a year and a half and only started to drop in April of 2022 when interest rates began their uphill climb. With fewer buyers in the market to buy, bidding wars dropped and the ratio dropped steadily until the end of 2022 when it bottomed out just below 98%. Because demand began to outpace supply again, bidding wars returned and our ratio crossed the 100% mark early this spring and hit 101% in June. This is just 1% lower than it was a year ago. To understand why we're back in bidding wars despite the higher rates, we need to look at supply and demand. Let's start with supply. Last month, 2,057 homes came on the market in Orange County. That's down 38% from a year ago and down 43% from 2 years ago. Supply is even down from last month when more than 2,200 homes came on the market, and that's especially notable because typically inventory is on the rise during the summer months. Okay, so now on to demand, which we're going to measure by the number of properties sold each month. Last month, 1,965 homes sold, which is nearly identical to the number of homes that sold the month before. So in other words, demand remained the same in the last month. However, it was 15% lower than it was a year ago and 44% lower than it was 2 years ago. So the supply and demand trends are continuing in the same direction we've seen since the beginning of the year. Both are down from the numbers we saw in the last 2 years, but demand is still outpacing supply, which is why we're seeing a return to bidding wars. And now the question every homeowner wants to know, so how are these trends affecting my home's value? To answer that question, we're going to look at the average sales price per square foot in Orange County, otherwise known as dollar per square foot. This number is the easiest way to get a quick gauge on what direction home values are going. And here you can see that the dollar per square foot rose again last month. Not huge gains, a little more than 1.5% from the month before, but with that gain, we're nearly back to the peak of $690 per square foot we hit last spring before rates began to increase. With half the year behind us, Orange County real estate is still being driven much more by lack of supply than it is by demand. The limited inventory is bolstering prices and keeping bidding wars alive, and with a large percentage of Orange County homeowners enjoying the low interest rates they locked in before last spring, it looks like the shortage of homes will continue either until we see a bigger drop in interest rates or until more would-be sellers decide they want to move more than they want to keep their current low interest rates. The Orange County real estate market is very dynamic, and even within the county, individual cities will experience these market changes differently. If you want to know how your particular city is faring in all of this, contact me and I'm happy to provide a city-specific breakdown. And if someone you know may find this information helpful, click the share button below.